Rahul Sharma, Director of Technical Head of Research from JM Financial. We'll just go to him. But there are a lot of mid-cap names, Anisha, that are actually flying. So the small-cap index is up 1%. The mid-cap index is up about 0.7%. And that's, how it is looking like in terms of the strength of the market, or we can say the breadth of the market. IDBI among the top gainer, up 8%. L&T Finance holding up 8%. United Spirits is up 7%. You have a DCB, a RCF, a Kirloskar Engine, and Uflex, which is also looking good. The CG Consumer is going up after a long time. Remember, I think the PE player has exited its entire stake. Indiabull Real Estate is now to the levels of 87. AB Capital is up 5%. IDFC, National Fertilizer, Union Bank is also looking slightly on the better side. India Mart is up 4%. City Union Bank is doing well, and Dr. Lal Path Labs is also up 4%. So the broader market is actually where the action is at this time. Let's go across to Rahul Sharma now. He's with us. Rahul, first a view on market, Nifty, Bank Nifty, and then we can take it ahead.
Yeah, so we've seen the entire run up from 15,200 until now. On an average, Nifty has spent around 4 days correcting, consolidating, and then we've seen a follow up. Something similar seen today as well. Nifty consolidated for around consolidated and corrected for around 4 days, and finally we're seeing that bulls are coming back with vigor. So as far as the Nifty positioning is concerned, on an immediate basis, we think that 17,800 should act as a resistance. That is until there the bias remains positive. Today, as far as the expiry is concerned, I think there is a short squeeze which has happened at 1716, 17,600 yesterday, and now Nifty is aiming for 17,800 kind of a possible level possible. Bank Nifty remains the stronger of the two indices and continues to remain robust. I think there is a very good possibility that in the August series, in the September series, Bank Nifty goes on to inch a new life high. So as far as the positional setup is concerned, Bank Nifty remains the better of the two indices. We are seeing PSU banks coming back into flavor, supporting the banking index. Private banks have already done pretty well, leading by ICICI Bank. But now the kind of setup that we are seeing in HDFC Bank as well as Axis Bank, we believe that 41,800, the previous all-time high of Bank Nifty, should be taken out very soon in the early part of September series.
The reason why we really called you was your note which says 21,000 on the Nifty, and this is something that you're expecting over the course of next 6 to 12 months itself, a 20% upside from the current levels. What's giving you this confidence? And as you pointed out, which are the sectors that are going to lead this rally apart from the BFSI space?
Yeah, sure. So if you see the components of the Nifty, banks and financial services account to 36% roundabout composition in Nifty, which is already doing well, headed for a life high. If we simply see a comparison of the consolidation which began from October until date, until say June period, Bank Nifty has already taken out from that consolidation pattern and is aiming for a new life high. The monthly RSIs are nowhere close to where it was in the previous rally of 2018, in the previous rally of 21 that we saw. So there is a lot of headroom left in banks, according to me, and banks is something that could lead the rally. The second leader in this overall setup is FMCG and auto sector. Now, FMCG is already doing very well. The index has already taken out the consolidation pattern, and they're already trading at life highs, both auto and FMCG, which account to around 9% on the FMCG, 6% on the auto. So net 50% of the Nifty weight is super bullish. Technically, the monthly RSIs are nowhere close to what they were in their previous bull rally. So there is a lot of headroom left as far as the bigger positioning is concerned. Yes, there will be corrections time and again, but these dips are to be bought into. Then you have a capital goods, which accounts for around 3% in the overall basket. That is already doing very well. The kind of setup that we have in the large cap capital goods, as well as some of the non-index stocks, is suggesting that the overall capex cycle has turned, and we are seeing good upside in the capital goods sector as well. So this accounts for around 53% of the Nifty, which is pretty robust. The remaining sectors, something like the telecom, oil and gas, consumer durables, power, these are around 30-35% of the remaining Nifty. These are moderately bullish. So don't really see any concern coming from these sectors. Yes, there are a couple of sectors which are neutral to bearish. Pharma is one of them, which is 4% of the Nifty, which is under pressure. Not under pressure exactly, but it is underperforming. Whereas IT is coming out from a 7 month of underperformance, and we believe that IT as of now remains neutral, but there is a good possibility that in the next couple of quarters, IT should see a big reversal as well, and IT should also start contributing to the Nifty's bull run. So, considering the way these sectors are, considering the way these indices, sectoral indices are, there is a good possibility that Nifty heads for not only a new lifetime high, but very well 20% return from current levels, which comes to approximately around 21,000 on the Nifty. So we are bullish on the Nifty with a 6 to 12 month kind of a time frame, and we believe that the rally, the new leadership that has come in from banks, auto, FMCG, capital goods, and maybe IT as a big reversal play. These are things which could propel the Nifty higher, and we could see the magical 21 figure on the Nifty.
Right, 21,000, and he was explaining that how essentially it can happen. When we just talk about, 21,000 or a sort of, 10, 12, 15% move on the Nifty, what happens to the mid-cap index? You said financials will do well. What will happen to smaller banks, financials? We've seen some rally over there, NBFCs. How would they perk up?
Yeah, so that's worth noting is the mid cap index, which is generally slightly you have a high beta coming into play, as well as also shows risk appetite as well. Mid cap index has broken out from that consolidation which began from October 21. So mid cap is leading the rally. Then you have an NSE 500, which is an even broader indicator of how the overall market is concerned. That has also taken out from the overall, if we simply draw a trend line from the consolidation which began from October till date, even the Nifty 500 is indicating that we are headed for more upside. So, opportunity, I would believe that lies in terms of headroom in the small cap space. The Nifty small cap index has not even started its bull run. I think there is a lot of upside in the small cap space as well. So we would like to be optimistic in the small cap basket. The mid cap basket should also continue to do well. And overall, we feel that this is one of those periods where we might consolidate for a couple of months because we've seen like a 2,800 point rally on the Nifty. We might consolidate maybe for a few weeks. Once the consolidation is over, we should see a big breakout coming in, which should be the second leg of the rally, and we should head towards the mentioned levels.
And Rahul, before we just let you go, any stock-specific action that you would like to recommend for our viewers? Any top bets?
Yeah, so our top bet remains Tata Motors from the auto basket. Auto is already doing well. They are having the time of their life. The auto index has taken off. Tata Motors is one of those stocks which is on a relative scale not performed as much as something like an M&M. It has a lot of catching up to do. It is one of those businesses which is present into every possible space that we have in the auto space, right from EVs to commercial vehicles. So we believe that the risk rewards are very much favorable in Tata Motors, and also the long-term charts are suggesting that a big turnaround is around the corner for Tata Motors. It can be bought with a 420 kind of a stop loss, and we believe that there is a 35 to 40% upside that can be had in the next 12 months or so. So Tata Motors can be bought for a target of 650. This is a delivery buy. We believe that if somebody has the stomach to digest the volatility and the patience to bear the food, there is a good possibility, there's a good probability that we may see a phenomenal return in Tata Motors.
Let you go on that note. Thank you so much for joining us. So Tata Motors, levels of around 650 thereabouts possible over the course of next 12 months, but keep a stop loss of around 420 thereabouts. On that note, we are slipping into a very short break, but don't go anywhere. Lots lined up on the other side.